Three quarters. ITC, Axis Bank and Reliance Infrastructure are off 0.5% each right now. That's markets for you. Gautam Trivedi, Managing Director and Head of Equities India at Religare Capital Markets, is with us right now. Gautam, good morning. Best wishes for 2013.
Morning, how are you?
I'm good, Gautam. Thank you. Let me just start with what you make of 2013. As of yesterday, we crossed $1 billion in flows, FII flows, into the cash market.
That's right.
So if anything, the pace has picked up from 2012. What do you make of that and the market right now?
I think the pace has definitely picked up, but we obviously can't annualize 1 week's net FI flows. But the fact is, the momentum right now is extremely strong for the market. I was last month in Asia, in Singapore and Hong Kong, met over 30 investors. And overall, the mood to invest in India at this point is extremely strong. Some of the long onlys that we met clearly said that they would allocate more money to India this year, given the outperformance last year. So I think all in all, it looks very, very positive.
Focusing too much on flows in a way is backward looking, doesn't tell you very much about how much flows will come in the future. But what is your sense? You said you met long only, they remain quite convinced about the story. Just a bit more color there, Gautam.
Yeah, I'll tell you what it is. I think a lot of people were extremely obviously happy and in some cases quite surprised at how well India did in spite of all the issues that we had last year, multiple scams, plunging rupee, weak macro, indecisive government, at least for the first half of last calendar. So I think in spite of all that, India having clocked a 26-27% dollar return, I think has been remarkable. Also, it's obviously one of the best performing markets in Asia outside of the ASEAN countries like Thailand and the Philippines. And also the best among the BRICS. So I think given all of that momentum and the fact that our PMI, and I think this is one metric which is very important when you compare countries across geographies. And the PMI, as we know, has hit now a 10-month high of 54.7. So that clearly shows the momentum that's there in the economy. So I think there is a lot, besides just absolute fund flows. I mean, people don't have to allocate more money to India, but clearly they see value in the Indian market at this point, and hence that money is coming. One other factor which I just want to add to this is the fact that a lot of the big money that would have otherwise come to Asia last year remained sort of elusive. And I think that money will actually start to come when people start to get more positive on China. So the day China turns, I think you'll see the return of big amounts of money, which I believe will not cannibalize India, will actually help India gain more money.
Why do you say that? Because most people are saying that China coming up, markets up there 10% or so recently, is this large enough market capable of taking in all that it gets. So isn't it India versus China, or is it India plus China?
No, it's not. It's India plus China. That's exactly the feedback I got from most of the investors that we met. So yes, in some ways you could say that India did benefit from China not really performing last year, but I think the money that came into India was not really the big money that normally comes into Asia. When you'll see that big money come back into Asia, India will actually be also a net beneficiary of that money.
All right. Okay, got that. Near term to medium term, Gautam, do you see a correction? Do you see a pullback? Historically, for whatever it's worth, the trend, the first quarter always signals a bit of a top in the market. And then the rest of the year does what it wants. What's your sense?
My sense is, though, I think the market will continue to go up in India, and I think for that matter, as it will continue to do the same in China and Japan. So I think Asia, I definitely for the first quarter, I see visibility for pretty strong momentum. Having said that, I think a lot, of course, depends on how the government behaves, and this year more than any other year, we are going to be watching the government very closely. The equity investors are watching the government very closely to make sure that they don't do anything that's going to be fiscally not prudent, given it's a pre-election year. So I think holding that aside, and of course holding the fact that we have a rupee which is clearly weakening given the high current account deficit, but holding some of these issues aside, I see a pretty strong equity market this year as well, definitely in the first quarter.
So are you saying the gains in 2013 would be largely front-ended? Is that what you're saying? Or Q1 will be very strong, rest of the market will be positive, rest of the year will be positive as well? Yeah.
I believe the rest of the year will be positive as well, but we will start off with a very strong first quarter.
Very strong first quarter. You get the budget in the first quarter, Gautam. What are your thoughts there? Some believe that's the only trend to watch this year, like 2012, when the budget was pretty bad. And everything basically took a dive. Markets, though, did well, even in that context, even in that backdrop. What's your sense about this one?
See, let's not forget, last year, 2012, the budget obviously was marred by the announcement on GAR, which finally went nowhere, thankfully. But the fact is, that clearly was a major issue for the equity markets, especially the foreign institutional investors, right? So that, I don't see that necessarily repeating itself this year or having basically any such announcement that would negatively impact the equity markets. Secondly, I think the government's pretty smart about the fact that they have a budget of 30,000 crores to divest. So I'll be surprised if they do anything specific to spook the market and cause a correction in the equity markets. I think they are pretty smart about that as well.
So essentially, you're saying it won't be a hugely populist budget. I mean, small things here and there might still happen, but it won't swing to the extreme.
I think their hugely populist measure has already been announced. I mean, the direct cash transfer, I think, will be in some ways a pretty big event from a voter's perspective, because voters who were getting subsidized fuel or getting subsidized subsidies across the board will now get a cash transfer, which clearly means a lot more to them. And finally, whether they end up using it wisely or not is anybody's guess. But the fact is that in some ways has already been the big event in terms of appeasing voters.
Okay. What else? What else are you watching out for? First quarter, you will also have the much anticipated rate cut from the RBI, Gautam. Where do you stand on that? Are you with the consensus you'll get about 100 basis point cut through the course of 2013?
Yes, we are. I don't know if that sounds boring, but unfortunately we are at that level. We're expecting... well, exactly. So we are expecting a 50 basis points cut between now and the end of this fiscal, and another 50 at least in the between 1st of April to 31st of December. So this calendar, we're expecting 100 basis points cut. Of course, a lot of that seems to be already factored in by the market, and I believe that the market clearly is hoping that the RBI follows through on what they're expecting, and the government, I think, has given enough indications that the RBI will or should be doing that.
A lot of this will depend on will the government follow through on a lot of what has been announced, right? At some level, you can't get away from the fact that this is the same government which was in power in 2012, 11, 10, 9, and of course years before that as well, right? So suddenly, because we got to the brink, now the crisis has been averted. With a rating downgrade perhaps now not necessarily coming through, should one expect the reform zeal to continue very strongly? Take reforms on oil and gas, for example. This talk of 10 rupee increase in diesel prices over the next 10 months. Next 10 months would basically get us to the doorstep of 2014 elections. Do you think the government will really follow through with some of this stuff?
See, I think just getting back to the earlier part of your question, I think let's not forget the fact that we have a new FM. So that the fact that we had a different FM who had different views and different economic policies clearly was obviously his view of the world and his way of managing the Indian economy. I think Mr. Chidambaram obviously is more as a different point of view, which is liked by the markets, and seems to be definitely more progressive, seems to have definitely made serious attempts to try and curtail the deficit, though the small steps. But the fact that he's even done that, I think, is usually appreciated by the market. What would they do between now and the general election is frankly anybody's guess. I don't have obviously access to that, but the fact is, I think the government is in some ways between a rock and a hard place, wherein they have between now and June of next year to come up with policies that will obviously help them remain in power, and I guess any incumbent government would do that. I don't blame them necessarily. But at the same time, the fear of a earnings downgrade by the international rating agencies is clearly, I think, on their mind as well, and they seem to be responding pretty well so far.
All right, got that. Let's talk about your investment style, strategy, Gautam. What is it? Is it more of 2012, or is it something very different in 2013?
Well, I think if we can go down sector-wise, and that's I think the best way to approach this. Within the auto space, last year we liked Bajaj Auto, continue to like Bajaj Auto. It's done extremely well. The one other name I would add to the autos this time around would be Tata Motors, and we are very confident about the way JLR is going to be doing. Our China analyst in Hong Kong is extremely optimistic about luxury car sales in China in this calendar year. In fact, he's expecting a 20 to 23% increase year on year in the luxury car market, which is 2 to 3x the average passenger car market. So that obviously is going to be a big positive for JLR. We like Maruti as well, given the fact that the depreciation of the yen against the dollar is a big positive. We know that a 1% fall in the yen equates to about 2.5% increase in the EPS for Maruti. So clearly a very big positive. I think the stock's got more momentum behind it. And the two sectors that we liked last year and continue to like this year as well would be cement and media. And I've been talking about this for over a year now. Cement continues to remain our top way to pick to play the industrial recovery. And more importantly, I think you've got Gujarat, of course, the state elections are just over. We have another 11 state elections and plus the general election over the next 18 months or next 15 months. So I would continue to like names like Ultratech Cement, JK Lakshmi Cement, Shree Cement. And media, I think, is a sector which a lot of fund managers that we've spoken to have missed out on. I think the street has really got that in some ways wrong, and Religare in some ways has been ahead of the street in terms of calling that right. And I don't want to come here and talk about Religare necessarily, but the fact is, I think digitization has been a game changer. The penetration of digital set-top boxes across the country in some ways reminds me of where our mobile penetration was back in 1999-2000. And I think that's only going to increasingly go up. Every month you see set-top box rollouts literally doubling to quadrupling. If you talk to companies like Hathway, they were doing about 40,000 set-top boxes in January of last year. They ended up doing about 250,000 boxes a month. So that's obviously a huge leapfrog, and I think that will continue. So these two sectors in particular, we continue to like as well.
All right. So in autos, Maruti, Tata Motors, Bajaj. I like cement and media as spaces as well.
That's right.
So just to focus on, you said the best way to focus and play the infrastructure revival theme is cement.
Yes.
Why do you say that? Why not? I mean, it's a huge space, lots of sub-segments listed. I mean, if you think the economy will revive only if infra revives, I mean, the whole space is a slam dunk. Of course, you got to take picks stock-wise, but what's your sense?
Well, are you asking me whether we should be looking at also
other sub-segments in infrastructure?
Yeah. Well, we do like the metal space overall, but at this point, I think, Tata Steel is not something that's our topic right now. We prefer Hindalco and Sterlite. We like those. We prefer the non-ferrous at this point. And I think we need to see more evidence of a genuine pickup in the economy in China and the spending there, which will help get metal prices up. I mean, iron ore prices are up 40% in the last 3 months, so that's clearly a positive in the right direction. So, but I think we're a little bit early on the metal space right now.
What about L&Ts? What about power equipment manufacturers like BHEL? What about road developers, Gautam?
Yeah. See, let's talk about the first two stocks you named. We like L&T clearly. It's still been the best way to play the Indian infra play. Doesn't have any of the issues which a host of other companies like GVK, GMR, Lanco, Gammon, etc. have, which is high debt to EBITDA, high debt to market cap, and so forth. So I think L&T remains obviously a great way to play it again, but it's a longer term buy and hold strategy. So that's what we like. We're still not confident about BHEL. We continue to reiterate a sell on the stock. So that those two basically are different ways to play them. But I think more so on your way to play infra, I think cement obviously is one way to play the infra spend, and I think the other way to look at the infra space is not necessarily from the absolute fundamental, but more from a financial standpoint. And what I'm alluding to is the fact that you've got a whole bunch of companies within the infra space that are heavy on debt, but have assets that they can sell. So I think one company, and one case in point really is Jayaprakash Industries, which seems to be making an attempt to sell their cement business and hopefully deleverage. So I think if you see more of these coming out, it'll be a big positive for the infra companies, but again, it'll be a stock-specific story versus being an industry-wide story.
What about banks, PSUs especially, Gautam? Do you think we've seen the worst of NPA problems in 2012, or the problem will continue to grow bigger?
I don't think the problems will continue to grow bigger, and I think the PSU banks are the best way to play the rate cycle, given the fact that we just discussed earlier on this show about interest rates actually coming down versus going up or remaining at these levels. We specifically have been pushing PSU banks since November of last year, and in mid-November we realized that the private sector banks were trading at a 170% premium to PSU banks, which I think was totally unjustified. Our banks analyst, Siddharth Teli, was probably among the first on the street to pound the table on PSU banks, and SBI remains a top pick. We still like Dena Bank, Bank of India. The other one to look at within the PSU banking space is Bank of Baroda. Mr. Malia has left behind an interesting bank, and I think we're waiting for the announcement of who the new CMD is, but I think that's a name where we've seen a lot of interest. But now that doesn't necessarily mean the privates are not interesting. We still like Yes Bank, we still like IndusInd Bank, but I think the action right now will be in the PSU space given how they've lagged the privates. More importantly, even after the rally that we've seen in the last 5 to 6 weeks in the PSU bank space, they're still trading, the privates are still trading at 103% premium to the PSU banks. So we still continue to like these 4 names that I just mentioned.
Consumers and FMCG, Gautam?
I think they've had a great run last year. They've done their bit. Frankly, given the fact that we are more now high beta, I don't really fancy these names anymore. The one name that I still we continue to like, and even though it's quadrupled in the last 12 months, is United Spirits. And from a longer term perspective, not necessarily over the next 6 months, but I think there's a re-rating taking place. There will be a cleanup of the accounts, and hopefully we end up seeing margins improve from the current 12 to 13% to a higher 17 to 18% over the next 12 to 24 months. So we like that story a lot. I think there's some assets in there that they could potentially sell if they wanted to, which includes White & McKay, or if not the whole company, at least the inventory of White & McKay. Plus, you've got, I believe, a 3.5% holding in United Breweries, which the new owner may not necessarily want to retain. And then you've got the IPL team. So you've got a bunch of assets in there that could potentially be sold as well and add value to the company. So we still continue to like United Spirits.
Got it. Gautam, before we wrap out, any other interesting, could be boring, could be out of consensus kind of calls that you're working on, that you'd want to highlight? Anything which could get interesting according to you as we proceed into the year?
I think I would advise people to look at the stock that I think shocked and surprised most of us and didn't see it coming. That was Walkart. I mean, it's had a phenomenal run last year, and the company, I think, at some point woke up and said, okay, we've been not a greatly liked stock until now. We've got a lot of leverage, and we got assets to sell. So I think going back to what I said earlier about Jayaprakash, or for that matter, even what DLF has started to do, is companies with high leverage, with the management making a serious intent to sell assets and deleverage the company and the balance sheet, I think is going to be the story for 2013. People will have to focus on names like a DLF or a Jayaprakash, and for that matter, even a Suzlon. We don't cover the stock. I'm not necessarily saying it's a buy, but here's a company that's currently in CDR, has assets that they could potentially sell to deleverage. And if the company and the management goes down that path, then I think you're looking at stocks that could effectively go up to 3 to 5x, depending on how fast they deleverage. And that's really going to be the theme for this year.
All right. So one way is to look at companies with high leverage, but with some real assets to sell and deleverage, not maybe
that's right.
Issue fresh paper, but sell assets they own. All right, got that. Gautam, thanks very much for your time. Great to have you with us here and run us through this whole spectrum of ideas coming in from you. Thanks very much, Gautam. All right, we're going to take a very quick break here. We're coming back in 2 minutes, keeping the focus on markets. Funny Shaker joins in when we come back on the other side. Nifty is at about 6,011, 10 points up. So right there, no real change. Tata Motors continues to be the big gainer on the Nifty 50. We're back in 2.